So before we begin, I'd like to just give a general background on the Center for Catastrophic Risk Management, which was founded back in 2005 in the wake of Hurricane Katrina. As you can tell by the participants on the call here today, we're a global group of applied researchers from academia, government, and industry who've come together to develop pragmatic solutions for the complex, multi-jurisdictional, messy problems of the 21st century. We conduct fundamental research on catastrophic risk through empirical data by identifying and engaging targeted teams whose expertise are uniquely tailored to each challenge. CCR aims to help make the intractable manageable. So with that, it's my pleasure to introduce our speaker for today. Dixon Wright specializes in surety bonds for construction and has been engaged in various industry initiatives to modernize surety products and services through data standards and enable data analytics for improved risk management. Sounds like a crazy concept, Dixon. The current DOE Orange Button Initiative seeks to harmonize the data between capital and financial markets, the construction community, and regulators to reduce soft costs and promote innovation in the solar industry. The objective is to leverage data and the construction ecosystem for increased infrastructure reliability. And with that, it's my pleasure to hand the reins over to Dixon.
Thank you, Rune. And I particularly appreciate the opportunity to speak to this group. One of the main objectives of the Orange Button is to try to break through the silos of the various stakeholders that are involved in infrastructure. And your audience today is quite a breadth of stakeholders across multiple silos. So I hope that what we can talk about today is the big picture and some of the obstacles to bringing together data interoperability for infrastructure. And I particularly wanted to do a shout out to my Orange Button associates who are joining this call so that they can answer some of the questions I cannot. I am an expert of nothing, but I push data interoperability for its value and as a business proposition. And so again, a lot of the experts that are actually doing some of the hard work are on the call and can answer questions, which is part of the platform for the brainstorming and collaboration, which I really appreciate. So I'm going to go ahead and switch to share screen, and hopefully everybody will now be seeing the page one. So this slide deck will be provided to everybody, and I might add that the slide deck is more of a movie than it is any individual slides. So you'll see links and a lot of information. The objective is to make the slide deck a valuable resource for you, and it'll be provided to everybody that's signed up for the list or requested from me. So let's just jump on in. The overview, at the end of the day, when we talk about infrastructure reliability, the capital markets are really driving it. That's where the money comes from. But when you think about how changes are done to the bigger picture, there's really three ways. The government does things through studies and regulation, takes forever. Innovation by private entities certainly is effective, but it's often proprietary and doesn't come out much. But really the capital and financial markets, when they start to understand what's going on and they can do data analytics, they are much more flexible, move faster, and can change the way access to capital by implementing best practices. So that's really what this talk is about. The capital markets being able to understand their risk better so that they can modify the way access to capital happens. And that's part of the objective of the Orange Button. So if you think about a typical panel array, on the left-hand side, you see the panel of yesterday, the array of yesterday. We really didn't know what was going on. Tomorrow, we know that these panels are getting much more sophisticated with measurement and monitoring, and you can actually describe down to the panel how an array is working. And so the question, on the financing side, is which panel array will get better financial terms? The obvious answer is the panel array that can demonstrate to its financial partners how they're performing, what they're performing, measurement, and are they compliant to the contract. In other words, if they can demonstrate predictable performance, they will get better financial terms. And that doesn't apply just to the solar array, it applies to all infrastructure projects. If you can measure and monitor and show that you are performing per plans and specs or per requirements, the financial markets will be much more supportive and provide you better terms and conditions. So I have the abstract here for those that get the deck without having the abstract ahead of time. So I'm not going to read it here, but the fundamental focus here is that the data right now is still fragmented all around the place. So if you look at today's reality, the fragmented multiple sources of data make it very hard to do portfolio risk analysis, data analytics, or any of that. So our objective for tomorrow is to be able to aggregate data that can be accurately analyzed to identify those failure points, because it's that portfolio management and that needle in a haystack that we might not otherwise have seen that creates the impact. So a simple approach might be, if you think about a solar racking system that, per compliance uses 1 bolt, some projects use 2 bolts. You can imagine that after a while, if the insurance industry starts to recognize that the panels with 2 bolts has significantly less loss ratios, then to get financing, they're going to require 2 bolts, even though code compliance only requires 1. That's the demonstration of the private market being much more flexible than it is government regulations. So it's simplistic, but it's that needle in a haystack trying to find out what causes and what it could be predictive analytics. So let's go to the problem statement. The World Economic Forum just did a deal in Davos where they called it the Great Reset. And they said, if you could reset as a result of the whole COVID and the whole reprocessing of the way we do things, what would we do? And so our collaboration group, the Orange Button, submitted a deal to the effort. And we said the problem is legacy systems cannot exchange data. So the solution is to fix that, make it so that legacy data can be, so legacy systems can exchange data. The outcome, obviously, is significant cost savings, data interoperability, innovation, risk management, and all the rest. So let's go quickly here on the federal button, because we keep talking about the orange button. There are really 3 buttons out there. The blue button for energy, the blue button for health data, the green button, which is energy consumption. You'll know that as your smart meter. And what was unique about this is the green button put together all the utilities across the United States and created one data set for energy consumption. So you could hit your utility, whether it's PG&E, Southern California Edison, Con Edison in New York, and you'll get back a data set on how you're consuming energy. For the normal consumer, you can analyze that data. It'll tell you to run your dishwasher at night. But for big campuses and big users, that ability to know how you're using your energy allows you to modify how you use it. In other words, you don't cycle up all your machines at once. You try to avoid using energy between 4 and 7. It also enables the utility companies to start to introduce tier pricing to also modify people's use. The orange button is much more complicated. It brings together the entire ecosystem of construction for the energy production. And that means your bankers, your contractors, your insurance, everybody. And instead of one data set, we have multiple data sets that rely on the ability of having one single dictionary that everybody's using for these various data sets. The objective, again, is no matter where you are or who you are, you can send information wherever to whatever system. And the data sets can be successfully and reliably imported by your stakeholder. So think about it like Microsoft Outlook. We all think of data interoperability as something complicated, but we do it every day. We send our address file out of Outlook with a simple click, and out she goes. We send it as an attachment. And it's a data set. So think about a solar system performance. It's the same thing. The orange button gives you the ability to put together a data that could be sent to someone. They can import it or export it however they want. The data set is set up of terms used in the dictionary. So whatever that particular use is from your business partner, they can put it into their system as they need. So let's talk a little bit about the ecosystem stakeholders. I keep talking about capital markets and financial markets. The distinction between the two is capital markets are the one who actually put money on a job. It's singular to a job, and they're specific to a particular job. The financial markets is a much broader ecosystem. That's the banks who provide letters of lines of credit, insurance products, surety products, in which are generally much more broad use. But they're both the capital market and the financial markets can drive the use of data standards by making it a requirement to have their product or service. This is an incredible article that McKinsey put together, and I suggest that all of you, when you get the deck, click on this. There are thousands of different companies that are exchanging data in the construction ecosystem. But as you'll notice, they all come to capital financing. At the end of the day, money drives the requirements of most of the data element and most of the data exchange. So if you look at a utility scale solar project, it has a whole group of different stakeholders, but it's the same on a $500 million utility scale as a small $50,000 interconnection. So let's go a little more granular to the data element. As I mentioned, the problem to data interoperability is that people and legacy systems have different definitions. If one is using profit before tax, the other is profit after tax. You can exchange the profit data field, but it's apples and oranges. The objective of XBRL is for all publicly traded companies, when they report to the federal government, the SEC, that is apples to apples. So you and I as taxpayers went to the government, went out and changed XML, which is just a field name and a tag, to XBRL, which is really nothing more than XML on steroids. It provides a whole level of deeper information so that the data is unique and you've squeezed out the data, or you enable data interoperability. So in our work in the orange button, we've now created a dictionary of the data taxonomy definitions so that stakeholders can do apples to apples data exchange without any third party, without any complicated deal. And this is put together by the government, so it's patent-free, license-free, and all the rest. But we're not alone. The Construction Progress Coalition has been working very closely on working on the common data exchange in the construction market so that there too we can use apples to apples. And Pete Dumont, thank you for joining us today. They are doing fantastic work in creating smart contracts. Smart contracts, likewise, in other words, for the stakeholders, they have to have common data elements in order for smart contracts to work. And so I highly recommend that if anybody has questions on smart contracts at the end, I thank you, Pete, for joining us. You can answer questions. The other standardized effort, the AGC and a group of people have put together standardized documents for construction. Again, the effort towards standardization is really taking hold, and that's what really creates the efficiency. But the data interoperability is important. So again, when we talk about a single element, when you start gathering them together, you get what we call a data stack. So let's talk a little bit about the data stack. When a project first begins, you have the permit and you have the permit data, you have the beginning of the information. But as it goes through its life cycle, we start doing project underwriting. We get the references, the utility, the regulatory. We start putting it together. And then we, on my side, we'll put together the surety set, which is important to the other stakeholders. And at the end of the day, when the job is done, you should have an operational report that says how it's doing. And then ultimately, you can send out a monthly operating report. So all of these sequences, the data set grows. It's not stagnant. And just as you can change a data file in Outlook and send it to somebody and they can see the updates, the stakeholders can all engage in the data stack that they need as the project goes through its life cycle. And it's also not just for solar. Any kind of energy goes on the grid would have a data set that could be incorporated and be part of the data stack. Again, the objective is to try to keep it simple. Business users like I can get information from my stakeholder, whoever I'm working with. I can import it into my system as easily as I can import an address file from Outlook. So let's talk about the life cycle of a project. The job begins with that initial data set, but as it starts moving into construction, that contractor will be filing monthly applications for payment, which is a host of information on how the project is going and how it's being built. And if you think about data analytics, as the project goes on, the first month you're going to have one application for payment. After 6 months, you'll have 6. Ultimately, you'll have a whole stack of different monthly applications for payment that can collectively tell you how the project was built with granular information for how it was actually installed. When you think about now going into ongoing operations, it's the same thing. You now have monthly operating reports that can stack up and can tell you how the system has been operating over time. And now you have a project life cycle of data. Now, you've probably seen a chart similar to this. When under the current mechanism, quite often when a job moves from life cycle, from phase to phase, there's a loss of data because not all the information is transferred. If there is data stacks and there are consistent use of data, you will be able to allow the project to go through its life cycle, maintaining that data from construction, from the permit, all the way through the monthly operating reports. That is really important because these data stacks that grow and grow, they add up. And when you talk about big data and all the rest, you can now look at it from a portfolio management. If you've got 100,000 or 300,000 projects, as the insurance companies and the banks do, they can start to look at that data and start to look for those things, the 1 bolt versus 2 bolt, that you may never have understood or recognized on a singular project or a one-off. But when you start looking at the entirety of a portfolio, you might be able to find things in which let you know that this is a probability of default, this is a probability of failure that you wouldn't have otherwise known. And that's really where the big picture is. So let's talk about some use cases. First, as I mentioned, the monthly progress payment. This is not new. Caltrans 15 years ago started publishing every progress payment on the web. And you can drill down and actually see project completion, paid to date, stop notices and LDs. Incredible project information. Virginia Department of Transportation also provides infrastructure information on its construction projects that a surety or any stakeholder could, in real time, see how it's happening. Now, 15 years ago, in conjunction with California State University, Chico, we created Project Status Connection, and we're actually pulling the data from both different disparate sites, and we're able to give the surety industry one dashboard on the project likelihood of failure by simply stacking it by which projects were behind schedule, had stop notices, or were being assessed liquidated damages. At the end of the day, that's really the source of predictive analytics. And that's what we shared with the Department of Energy when they were looking to see how they could build a smart grid with the same kind of transparency, with the goals of being able to provide the financial markets with the efficiency of data interoperability. So let's go on now, the construction onto the monthly operating report. This example is very simplistic, but most solar projects are single purpose entities under a portfolio and generally are tax driven. They have depreciated, they have all sorts of mechanisms where on a GAAP basis, that single purpose entity's financial statement may not look that good. Well, I'm going to step back a little bit and talk about the surety market as a financial market, because you'll find that it is similar with banking and just about everything else. There's a certain point where on the left-hand side, you can see the positive underwriting factors. On the right-hand side, the negative. And the more the negative outweighs the positive, sooner or later, you're going to get to that point where you're not going to be able to get a bond, you're not going to get financing, you're not going to get insurance, whatever it is that you're trying to get from the financial markets. So what we're saying here is the bond is denied at a certain point. And if we can change that point to where the surety could write the bond and provide the financial guarantees, that would be because it had a better understanding of its underlying risk. So again, the surety market has different terms. If you've got nothing but green and no red, you're going to get the best of terms, all the way up to where you're being required to provide collateral. So in my industry, the professional engagement is in banking and anything else, you were involved the entire way. But what's happening now is because of data analytics, you're starting to see a lot of things being done automated. You can get online insurance instant issue. You get online surety instant issue. So the automated part is now starting to see much more prevalence. And so it's growing and growing to where now the professional engagement is actually getting narrower and narrower, but it's now really where we're needed, where eyeballs and handshakes and an understanding of the project is important. So let's go back to the monthly operating report. We have a GAAP basis in which the single purpose entity may not look that good. If in the underwriting, you're trying to increase your positive underwriting factors, the approved underwriting information, the monthly operating report will let you know. If you have a PPA that requires 1,000 watts a month and you're doing 1,200 watts a month, that information is important. It also allows you to improve risk management, because if it's not producing 1,000 watts a month, you can engage early to find out why. And that is obviously because you can start to do AI on the portfolio management, literally shifting the underwriting from GAAP, where you really don't have an idea of what's going on in the project, to actually knowing how a project is and understanding the value of that single purpose entity. So as evaluated by the surety, they can now have a much more estimated value and a better understanding on equity than GAAP could ever do. Changing a declined opportunity for the solar installer and the developer to now being approved because he's giving the information to the financial markets that allow much more better granular underwriting information. So the market actually can be extended so that more capacity could be provided to the infrastructure markets based on the ability for the surety industry, the banking, the insurance industry to understand better what its risk is by that portfolio data analytics. So moving on to the surety bond, that's a surety product we write the guarantees. The traditional is done with a paper surety bond with a power of attorney, a jurat, a seal, a notary. We exchange it with wet signatures, with FedExes. It's really a nightmare. Thanks to COVID, it's accelerating now where people are accepting electronic surety bonds much more. But that is still a PDF now, and you're relying on DocuSign for who signed it and whatnot. The next generation that's coming is a digital surety bond, and that's what we're working with Tineview and SureWave, and I thank them for being on the call today so that they too can answer any of your questions directly. But the digital bond will allow the stakeholder to not only validate the bond, so he doesn't need the DocuSign and all the trappings of the paper bond, but receive back the digital information on that bond that they can import into their system. So if you look at a utility guarantee bond, the bond form itself is still the block, whatever the text is of the form, but it begins with a set of data elements, and those data elements can then be imported by whoever is the stakeholder. As I mentioned, a surety bond may have multiple stakeholders that want to know the surety bond is in place for risk management, for compliance of the loan. Now, with the bond validation number, each one of these stakeholders can get a proof of validation and get the data that they can import right into their system instead of having it a PDF that just sits in a folder that cannot contribute to the portfolio management. So one of the interesting mechanisms and platforms that's out there is called OnBill. OnBill Repayment has been thoroughly researched. And again, I'm not going to go into this text. This is so you can look at it, the slide deck later. But the basic premise is that you can borrow money through the utility and pay it back on your bill. Now, that's a low default rate. So the debt service and the debt charges should be less because it's a low default rate. And the idea being that if you can have a $10,000 a month utility bill and reduce it to $1,000 a month by putting on a solar system, then you can pay $9,000 a month on your debt service and still be cost neutral. And then after you've paid off the loan, obviously you have savings that allow you to do it. And it is simple. You own it outright. There's plenty of models out there, the 30-year deal where you have somebody else own it. This allows you to own it directly and directly receive the savings. So it's a very simple structure, but financing comes in after the construction is completed under the traditional on-bill, so it's a little tough. What we're looking at is adding predictive analytics and surety-based risk management into the on-bill structure. And here, your borrower can put up a utility guarantee bond guaranteeing the financing, the money. Therefore, the debt structure and the debt financing should be much cheaper because the value proposition is you're going to get guaranteed for payment. We're also introducing, under that same model, performance bonds on the contractor. Because what does the dentist know about procurement, or what would they do if the contractor were to fail? By bringing in a surety industry that backs the solar installer, we protect the lender, the dentist in my example, and also the lender, because the dentist is protected against default, so too is the lender. So we're adding risk management tools that really rely on tracking performance. So the traditional on-bill, the debt service could be pretty high, but when you reduce and eliminate most of the risk to the lender, the debt service can be significantly less to cover the expenses for those risk mechanisms. And now your savings after year one start to really appreciate, and you can really have some savings. And what this would allow the market to do, the capital markets, is by introducing risk mechanisms, we can bring in more financing into infrastructure through the on-bill structure. And again, it doesn't matter what your infrastructure project is. On-bill is specifically for solar. But when you know what the data is, whatever your construction project, you will be able to get better financing. So risk management, protect the borrower, protect the lender, and you're going to have easier access to capital. So where are we today in this model? Well, in 2014, the government passed the Data Act, which requires all federal agencies, in order to get funding, to report how they're spending it, much like Caltrans does on how they're spending. So there's legislation already in place that's moving the federal government. We all know that we're trying to do the UN Sustainable Development Goals, which likewise looks for us all to find ways to improve our fight against climate change. The XBRL has done an incredible job putting together data-specific uses of their taxonomy for contractors, for solar, for the fintechs. The SBA is now looking at working on XBRL so that it can provide small business administration support to small business and whatnot using the same dictionary. Environmental reporting is now starting to look toward XBRL because it's coming out of financial reporting. And the more you could look at the data analytics of green energy allows the SBEs to look at that as well. FERC is now starting to require public agencies to report to FERC using XBRL. So the adoption of this data standard as something that is breaking through the silos is really out there. NIST has recently put out a guideline for the data interoperability. What's really exciting is the California Public Utilities is now currently investigating what it can do to improve financing options for energy customers. And PG&E is launching a pilot with OnBill and looking for the orange button to come up with innovative and creative ways to bring financing using that OnBill structure. When you look at some of the more interesting things too, the information on data, and again, this slide is provided for those with Get the Deck. The Solar app is putting together the permit data across 64,000 different AHJs, authorities with jurisdiction. So imagine if you're an underwriter for a bank or a surety or insurance, the permit information is going to be very valuable for you if you can import it from wherever you are in the country. The AHJ registry is something that Jan is on the call today, talks to. They're put together 64,000 different people and helping to standardize the process of putting together the permit. And then you have the permitting and inspection finalized. You can imagine if you're insurance and surety, if you had the data on how the project passed inspection with inspection data, that starts to build the data for that large portfolio. So again, my summary is if you know that 2 bolts are better than 1 through your portfolio management, you're going to, in the financial markets, look for that. But also when you can provide that you're using best practices, your access to capital will be better. Because our ability to have consistent data that allows us to put together this portfolio is where the magic comes in, and that's where the orange button is creating the foundation to make that a reality. So what I really like about this platform when Rune discuss it is, you only get a half an hour to talk. Most of the time is for collaboration between the stakeholders that come to this call. And again, I'm excited about the fact that you come from different segments and different silos, because brainstorming now, we've sort of laid out what the potential is. We talked about what we can do. So what do we do for brainstorming? So what I would suggest, you've probably all seen this before. We are right now at the chasm. We have a number of people using the technology, a lot of people implementing it, but we still have to get that over that hump. So I would suggest that as we talk about our brainstorming and collaboration, we think about where we are as a chess game. Overcoming the chasm is much like a chess match. There's 2 main things that we see. There's opposition to disruption. We know that across all segments, no matter what you're talking about. And for us to prevail, the ecosystem data interoperability has to prevail. So let's think about it. To win the chess match, we have to understand disruption is our biggest problem, but meritocracy is our biggest asset. That's 2 opposing forces, no matter what silo you're in. So let's go back on the solar side and what we're doing with the orange button. We've got some strong offensive tools. Certainly, we've got a lot of government support. The digital surety bonds is starting to enable the ability to bring together multiple stakeholders on a single deal. The orange button data standard can now be used by smart contracts, blockchain, and all the rest. And XBRL is an internationally recognized and adopted standard. But our opposition is still significant. Number 1 is economic. A lot of people are very fearful that they'll lose their job to automation or AI. So they prevent really the collaboration necessary because they're afraid it'll harm them economically. The other problem, obviously, we've talked about is the very fragmented ecosystem. And the more personal, it's not my idea, that's not my department, they don't want to deal with it. And the other deal is perception that there's other solutions out there, what we call vaporware. And you've got to look at a bunch of minor issues. Obviously, apathy, why fix it if it's not broken? You know, the government regulations, the difficulty of making changes. Nobody wants to be responsible. Everybody's in a short-term mindset. And of course, we all have a history of failed IT projects. But going for us, we have innovation, entrepreneurial, we have trade groups jumping in, we have international standards, we have the reset we talked about with the World Economic Forum. We have plenty of successful IT projects. There's plenty of people here with long-term mindsets. And at the end of the day, we all know that being able to implement these changes will give us each a competitive advantage. So to win the chess match, we have to, number one, get rid of the disruption. That's number one. After that, we have to overcome the economics. They're not my idea. We have to really address those issues. To win, we have to look at an ecosystem approach. It cannot be a silo approach. So we have to do that as number one. Number two, we have to look at on-bill financing as a partnership that we can all collaborate, because it really has multiple stakeholders all looking at one single deal across an ecosystem. The California Public Utility investigation is going on right now. We should all reach out to the California Public Utility and work with them so that they approve on-bill financing so that people can actually apply for it. We should all support the PG&E's on-bill pilot so that they're trying to see if they could work it out for their consumers and actually work. And then lastly, and most importantly, as we start finding all these data elements, we have to work on expanding the XML taxonomy so that the extra data fields we find can be put into the formal taxonomy and can be relied on by all the stakeholders as they seek to do data interoperability amongst each other. We do that, it's checkmate. Meritocracy prevails. So for our brainstorming, what I'd like to talk about, how do we leverage our positives and how do we overcome our negatives? So that's my 30 minutes.